But let's talk about another stock that's under pressure, Avenue Supermarts. This after Goldman Sachs has gone ahead and cut estimates for the company. Mangalam, fill us in with their rationale. The stock as is has seen a correction from the top, but they believe there's more downside in stock.
They've been sellers on the stock for a while. They believe that there's more downside in the stock because remember last week we had spoken about how there has been increased discounting in the quick commerce space, and as the values of the basket stands, it is at par with DMart. Earlier the moat for DMart was that they've offered products at the cheapest price as compared to the market, and that's where Goldman Sachs believes that it is facing increasing pressure. In fact, DMart has to go ahead and increase their discounts as well to maintain their competitive advantage, and the number of stores that they have outside of top 10 cities will be where they will start to grow. And store opening is something that the street will be eyeing going forward for DMart itself, whether that opens as fast as it has been opening in the past as well. People want DMart to open more stores and much faster as well. Because of this discounting, lower revenue growth estimates as well, they believe that their EPS estimates, what they had earlier, needed to be trimmed from around 4 to 6% itself, and that's what they've done over the next 3 financial years. And their target price, which was earlier 4,000 rupees, now stands paired at around 34.25. Two other factors that may be impacting the stock in today's trading session. One, it's the first time there has been a target price cut coming in on DMart ever since the stocks come into F&O. So before that, there was only cash trading. Now with F&O trading, could there be a case of increased short positions being added once there is a negative note? The same thing that happened with LIC yesterday as well. The second thing that I'm looking at is we also have the Vishal Megamart IPO that opens today. They've had revenue growth of around 24 to 26% over the last 3 years. They've offered the company the shares to shareholders at around 55 times 1 year forward earnings, as against DMart itself, it's trading at around 80 times. So with all these factors coming together, maybe there is some underperformance that we're seeing. Mind you, the stock has already seen a correction, currently sitting with a cut of about 2%.
All right, Mangalam, thanks a lot for that. Well, let's move on then. On the sidelines of the Rising Rajasthan Summit, my colleague Rachna spoke to Mr.